The most important thing about trading is your trading strategy, how you look at the charts. What's up, guys? Welcome back to Maverick's Point of View. So, it's the 2 a.m. It's still, well, Sunday going into Monday, 2:10 a.m. I've decided to make this video. One, because I'm really tired and I know I need to make more videos. That's what I'm trying to do. I'm banging out these videos to give you guys more value. So shout out to me for trying to help you out, right? Because not a lot of people are doing that. And obviously all these videos are free. I ain't asking y'all for nothing. I don't need nothing from y'all. It's really just, this is what I'm meant to do. This is my walk. So I won't get into a long spiel, but to keep this video short, I am talking about the differences between futures and forex, because a lot of people are talking about how different forex is from futures. And I guess when you go in a lower time frame, things like some type of manipulation, um, some of the fees and things like that. Also the difficulties, because like as far as like the brokerage and stuff like that, a lot has changed in the last few years. I'm an old head when it comes to this. I guess like I said, I've been trading for 11 years, so things for me, I just kind of figure out how I need to move and maneuver. In some places I'm godfathered in, like my trading broker, I'm godfathered in, and they don't even trade for the US no more. But anyway, we're not gonna talk about that, so I don't get kicked out. But long story short, there's differences and some nuances, but they're kind of like preference, because when you look at the charts, which is what matters, the charts are the same. Like the charts should be your focus on this channel. I want to talk about keeping it simple, the simplicity of trading as a whole, and really just not overcomplicating it. And that also comes to what you're trading versus how you're trading. Like that's all your preference, whether you want to trade in an option style, which I don't recommend, or a future style, which is common, especially with all the prop firms right now. That's what they're using. For a style like myself, it's really just preference. Like it's not that big of a deal. I'm gonna show y'all what I mean, because I can show y'all better. I could tell you, right? We're gonna pull up a futures chart. Let's go to, matter of fact, we'll just go to silver because we're already looking at silver. So you know what? Let's see. There's so many different cool things you could do with this. Let's put the layout setup. Hopefully it doesn't change. As a matter of fact, let me do this. Let's try this out. Yeah. I'm doing this because I want to do a whole different setup and do the apples to apples for y'all. This is exactly what I wanted. All right. So let me minimize this. Shrink this daily. Obviously, as y'all see, I didn't change anything, so we can keep what we had on there. Okay, let's make sure this is the futures chart. Now it's the futures chart. Minimize that. All right. And also go to the daily. Okay. So let's see what we got here. When you look at the charts, y'all tell me what you think looks a little harder to determine. See, what I don't like about futures per se is like the chart though. Like you see these random gaps, like it'll, how do I explain it? I'm trying to keep it simple because I know most of y'all still probably don't know yet. I haven't dropped the free mini course, but even just grabbing this level, I'm just gonna keep this super simple. Boom, that level there. Boom. This level here. This level here. This level here. And let's just use this level here. All right, so when you're just looking at it, apples to apples, like, I don't know. I feel like the standard Forex market just looks cleaner. Like, there's none of these random gaps, right? Like, okay, the only random gap that's similar is this one right here, which I love that it does this, so you can see, like, literally February 3rd, 2026, same time, space. There's a little gap right here, right? And that happened on both charts because that's when the market opened. But when you look at it, like even this kind of like failure here, you know, it still failed off the same level. Like I don't know. Like you know what I'm saying? Like when you look at it, it's the same data. Like I don't know what people are tripping about. But you know what? I do know what people are tripping about because they're looking at lower time frames. They're looking at 15, which we're not gonna do because I don't trade those, like I told you. But if you look at it this way, like yo, look, let's draw the zones. Keep it going. Keep it simple for y'all. Like, I guess that could give you some more information there. This daily low zone pocket, this daily pocket versus this daily pocket could give you some more information as to why this price just stopped here. So I could see that. I could see that. I actually do often look at both of them when I want to double and trade my futures account. So yeah, that'll help you a little bit, right? That'll help you determine why price just randomly stopped there, because on here, so let's go. On here you can see that if you take that whole brick and wick from the fourth, you have more to work with. However, let's go to the weekly. It's the same. I mean, I'll give you that. I'm really trying to find a difference for y'all right now. I'm sorry. I might even cut this whole part out of it if I really can't find nothing of value, but let's do it for H4. Oh. I see no major difference. Like, it's the same, you know what I mean? So I guess like the biggest things are obviously the fees, um, and the spreads, and just certain little nuances. But like if you're trading like me, where you're trading on the and see, so here's another thing to keep in mind where it's futures versus forex. On futures, for some reason, and maybe this was just me because I haven't been as well versed in futures as other people. So I'm open to correction here. But when I was trading it, with some of these prop firms, I noticed that you can't hold trades, and I don't like that because I'm a swing trader, right? I want to hold over a period of time. So forex gives you can hold for a whole year if you want to. Obviously, granted, as long as you're not in a negative mood, right? And even if your account can handle it, I guess you can hold a negative move for a whole year. That's up to you. That's your prerogative. But my entire point is you have so much more flexibility for how you want to place your trades and how long you want to be into your trades versus futures. You can only be in for the day. And definitely with the prop firms, it may not be everywhere, but especially with the prop firms, which is why most people are trading futures. You're only able to be in for a day, and then after that, you're cooked. I'm pretty sure most of the people in the U.S. are trading futures are trading it because of the changes in our financial regulations, which I'm not going to get into. But long story short, they just made it really, really super hard for us to do anything because the U.S.'s financial problems are like tragic, like literally, like our financial system is so garbage that like we have so many stupid rules that other countries just don't want to be a part of it. They're like, yeah, y'all can say that. So unfortunately, we get scrutinized and we pay the price as individual traders. Obviously, the big dogs, they get around it. They create some trust fund corporation in the Caribbean islands somewhere. I'm not going to tell y'all exactly where. In some of my consultations, I do go into that, but I'm not promoting that on here, and that's a whole different conversation for another day. That's just my other big clients. That's what we talk about, like how to maneuver outside, lawfully and legally. But you know, you just got to create a system and a strategy right now because the U.S. is doing everything they can to keep the little man down. So, yeah, this is what I want to show y'all though. Mainly the charts are the same, and as long as the charts are the same, that means the opportunity is there, and I can find the opportunity the same way. So it'll have like little nuance changes, like with those things we looked at earlier. Let's go and see if we can see anything else that's maybe different. Like let's look at micro versus. Yep, definitely the same. Yeah, this is the same exact chart. Like, so all in all, the purpose of showing you guys this video is just don't listen to everybody just because they're saying some stuff on the internet. Like, look at it for yourself. Like, I'm showing y'all apples to apples, the comparisons versus this chart over here versus this chart over here. This is Forex, as y'all can see, forex.com. This is Comex, which is futures, right? So when you're looking at this, like, there's no difference. So It's all about your trading strategy. That's why I want to drive and bring y'all back to the most important thing about trading is your trading strategy. How you look at the charts, what opportunity you're looking for, what time frames are you on to find that opportunity. Those are things you, as a new trader, advanced trader, need to focus on regardless. So are you on these little time frames and that's why you're getting screwed? Or are you on the bigger time frames and you see the full picture and that's where you're taking W's? That's why you're winning. So all in all, that's what I wanted to share with y'all tonight. This is a quick video. Like I said, it was longer. I matched it up for you guys. Keep it simple, short. The free mini course is coming soon. And yeah, I look forward to bringing y'all more continual, consistent value. That's it. Y'all be easy. Maverick's point of view. Thanks for tuning in. Peace.